Well, first off, I found this really interesting to define the definition. What does the IRS consider self-employed, and what are the implications if you are self-employed or if you aren't? So I'm going to get into that first. Who's self-employed? Well, one of the first parts is solo. We're not talking a large company or a big corporation here. Generally, it is a solo, one man or one woman shop. And what I mean by that is the IRS says a person who is carrying a trade or a business as a sole proprietor, an independent contractor, a single member LLC, or a member of a partnership. So other people could be involved, but mainly it is a smaller type of business. Now, even if your small business isn't making money, as long as you're engaged in activity that is profit-driven, that's the key. In other words, that your goal is to make money eventually, even if you don't maybe right away. That's the key for being self-employed. And then the last important point is that it doesn't have to be a full-time job. Time is not really the elements considered so much here. It's more about the profit. Of course, we're talking about the IRS. Duh. So when I dug into a little bit about what is a hobby versus what is a business, this is where it gets really sticky and kind of interesting. So the IRS has several guidelines on determining whether your income is considered hobby income or business income. So first off, if you expect to make a profit, like we just said, it's probably considered a business. If you engage in the activity for personal reasons rather than profit, your profit could qualify as hobby income. That's kind of interesting. We'll get into that more in just a second. If the activity is your only or your main source of income, it's probably going to be considered a business. Keep that in mind. If your activity you've profited in the past, then it's probably going to be considered a business. Remember, this is the IRS defining stuff, guys, so they want to get their tax revenue wherever they can. If you put a tremendous effort into the activities, the IRS might consider it a business. For example, do you stay up late to meet deadlines? Rather than if it were a hobby, you might just do it in the afternoon when you feel like it, something like that. And then finally, if your activities, the profits increase even a little bit from year to year, the IRS is probably going to see that as a business rather than a hobby. I've also seen some other sources that say that if the income from your hobby or business is above $400 in a calendar year, then the IRS is probably going to consider that a business. So keep that in mind as well. Pro tip. It helps if you have a written business plan. So if you really are serious about a business and not a hobby, it helps if you have that written down, what your goals are, how you're going to make profit, and plan that out. Now, why do you care if the IRS sees your activities as a hobby or a business? Glad you asked. So a hobby, you can't deduct expenses against the hobby income. So let's say you made just $300 from your hobby income. That's great, but you will claim all of that $300 and pay taxes on it rather than being able to deduct the expenses that you incurred while you were doing that. Now, if you have a hobby, you're not going to have to pay the self-employment tax, which is kind of nice. But again, you can't claim the expenses against it. So it's a balance. Let's assume that you are running a business, right? So you're going to have to pay the self-employment tax, but you can deduct the business-related expenses against the business-related income. And this is where it gets really cool. This is something important to keep in mind also as we approach the end of the year to make sure you are categorizing these correctly. Smart move number one is to maximize your business expenses. This is one of the big benefits to running a business rather than a hobby. So make sure you're taking advantage of it. What do I mean by business expenses? There are a few examples up here on the screen that I found particularly interesting. You can find an extensive list as well. If you look online, there are some tax websites that also list these. But a few that are interesting are computer and tech. These can be related to your website. These can be related to subscriptions that you have for software that's required to run your business. Even things, for example, we use Dropbox. We use Zoom, obviously. Any of these related expenses that are used for business, you can deduct that subscription, the cost of it. So keep that in mind. Equipment. This could be anything like a computer that is used for business. This could also be specialized equipment. Let's say you're doing a 3D printing operation. Okay, those things are not cheap. You can deduct, and sometimes you can actually depreciate that over time, or sometimes you can just deduct the full amount. Furniture and decor, yes, really. You can deduct those expenses to establish an office, a presence, and maintain that. Shipping, postage, and office supplies, those stamps, those shipping costs, make sure you're deducting those. Gifts, this one I found interesting. You can deduct up to a certain amount of gifts that you give to clients. And if you have employees, you can potentially deduct that as a business expense as well, especially if it is something that's in the realm of employee education or improvement, something that is team activity maybe that is related to business goals. Yeah, you can deduct that as well. So improve morale, get a tax break, all good stuff. Bank fees, you can also deduct any fees that are basically associated with running your business. And insurance. So this is interesting and brings us to your next pro tip, and that is medical insurance. So the premiums for yourself, your spouse, and your dependents, including long-term care, if you have a long-term care policy separately from your medical insurance, those could all be business expenses. And the policy does not even have to be in a business name. If you are a sole proprietor, you are basically the business, and that can flow through your tax return. So think about that with medical insurance premiums and make sure that you are putting those in the right area so that you get the tax break on that. There's another pro tip that I found very interesting, and that's regarding charitable contributions. So when you make a contribution to a charity, normally that's not a business expense. That might be a personal decision, not a business expense. However, if you give money to a charity and that charity in return is advertising for you, they are saying that you are a benefactor. They are promoting, hey, go visit with these people or buy their product or something like that. That is advertising, guys, not a charitable contribution. You're getting something in return. So claim that as an advertising, a marketing expense. And then it's a business expense and it's deductible. What's also interesting about that math is this gives you a bigger tax benefit in general than an itemized charitable contribution. So think about that and maybe even talk to the charities that you are inclined to give. See if they want to run an ad in their bulletin or something like that. Benefits them, benefits you, and you also get a tax break. Win, win, win. So, pro tip of the day. Now, while we're on the topic of categorizing expenses for the biggest benefit, that brings us to tip number 2. Smart move number 2 is keep it simple, sweetheart, or put it on autopilot. There are so many great record-keeping apps and functions on banks these days. So whether you use a system like QuickBooks, FreshBooks, Zoho, Wave, some system that can feed from your business checking and credit cards to sync and categorize. Oh, guys, it's such a time saver. It's wonderful. Then all you have to do is review periodically and make any adjustments that maybe that AI didn't get quite right. But I've used this myself and I find it's a huge time saver. So look into that. A note, there's popular software that Mint that many business owners are familiar with. Sorry, you probably know that's going to shut down in January of 2024. You can use Credit Karma instead. That's kind of where they are directing their business, or you can go elsewhere if desired. If you have questions about that, feel free to ask one of us. We've used some different softwares in the past, and some are better than others. Easy to put on autopilot. Do that so that you don't have to spend your valuable time in categorizing expenses. That's something that can be easily done by a bot. Also, be sure to keep your personal and business expenses separate. This may seem like a duh to you, but I will tell you this is where things can get really messy, especially in claiming your taxes. So have a separate credit card, checking, and savings account, 3 accounts, for your business and separate then for your personal. That makes things so much clearer and easier. You can also automate your tax savings so that you can pay those quarterly minimum taxes that you'll probably have to pay as a small business owner. You can put that on autopilot so that you don't have to choke each quarter in paying those estimated quarterlies. Now, a shout out to Donald Miller. He has an incredible podcast. If you don't know it, it's called Business Made Simple. And he actually advises using a 5 checking account system to help grow your business beyond just being able to make the quarterlies and keeping it small. He's got a great suggestion on how to have a larger vision for saving and for your future. So if you don't know the Business Made Simple podcast, check out episode 119, which aired earlier this year, where he talks about his 5 checking account system. Advanced pro tip there. Let's move on to the last smart move when that's thinking about your future. It's not only good practice to build your future funding for your future lifestyle, but it's also good for tax breaks. Can you sense the theme here? So for potential tax breaks, now first I want to talk to you about a Roth IRA. Now you don't get a tax break today in contributing to a Roth IRA, but you do have tax-free income that's building for you for your future. Guys, I can't strive this enough that this is so important when you get to the time when you want to make work optional, aka retirement. You want to have saved enough money in both types of buckets, a tax-deferred bucket and a tax-free bucket, so that you get to choose how you get paid in retirement. And you can control your taxes potentially much better than you were able to control them when you were in your working years. So that's why I always start with Roth IRA first. You do have to have earned income as required by the IRS in order to make contributions to a Roth IRA. So go back a second. If you've maximized all those business deductions to where you have practically no profit, no income to report, well, you might not be able to make a maximum contribution to your Roth because it does have to be profit. It does have to be earned income in order to qualify to make a Roth IRA contribution. So, for example, if you are under the age of 50 and you wanted to make a full maximum Roth IRA contribution in 2024, that new max is $7,000. So you'd have to show $7,000 in earned income in order to put that into your Roth IRA, just so you know that. Now, maybe you're on the other end of things where you have too much income. If that is true and you are above the income threshold where the IRS says, nah, sorry, you made too much money, you can't put money into a Roth. Guess what? That is only regarding contributions, regular contributions. The backdoor Roth IRA strategy is completely legit. Congress has said so, IRS has said so. And what that involves is just a few extra steps to get money into a Roth. But you can do it. So don't let anyone tell you that you can't. You'll just need to utilize a backdoor strategy in order to do that. And if you're confused about that, ask one of us. We love letting business owners know about those opportunities. Let's move on from Roth IRA to opportunities for business owners, self-employed retirement accounts. Guys, these are things that people in a corporate job don't have and can be really beneficial. So take advantage of these. This can include a SEP IRA, a simple IRA, or a solo 401k. All a little bit of different flavors depending on your goals and how your business is organized. So make sure you're making some right choices about that. But if you already have one established, prioritize putting money into it. You're going to get a tax break by doing so. You're going to build for your future. It's just going to be a wonderful thing to make sure that you add to your business. What I want to emphasize here is this could be higher savings than you would get possibly at a corporate type of job. For example, the SEP IRA, which is a self-employed IRA, you can save as much as 25% of your total compensation into that vehicle and get a tax break on it. Isn't that nice? If you could take off 25% of your profit and say, hey, I don't want to pay taxes on this. I'll pay taxes on it later. That's basically kind of what a SEP does. Now, there is an annual maximum. So if you're operating a, several $million company or something like that, you can't put all of that in there. For 2024, for some future planning, the maximum for a SEP is $69,000. So nice high limit, much higher than a Roth IRA that you could potentially put into that vehicle. And the best part, these employment accounts, self-employed accounts, can be combined with a Roth. So you can do both and really maximize your future savings in a tax beneficial way. Better, in my opinion, in many ways, than putting it away into a savings account or a CD, even though CD rates are good right now. These are going to give you tax benefits as well as growth benefits. So guys, prioritize these. These are really smart moves. In conclusion, being self-employed has its own particular headaches, and I know it, I get it, but it also has some really great benefits. So action items if you are self-employed, top 3, maximize your business expenses. Use a simple automated system to keep it simple. Put that on autopilot. If you aren't already using one, sign up for one and make your taxes so much easier. Fill up those savings accounts, those retirement savings accounts. Open one if you haven't already, or put money into yours if you've kind of forgotten about it. These simple steps will put you so far ahead of other business owners and really set you up for success. So if you're not sure where to start or what's right with you, talk to us. We love helping small business owners survive and thrive.